There is a lot to unpack with regards to the Niagara real estate market right now. So I'm here to try to do just that, to have a look at some of the bigger picture pieces of the Niagara real estate market, break down pricing and supply and days in market and those kind of pieces. So if you're looking for a deeper dive into the Niagara real estate market data, you are in the right place. My name is Patrick Burke, a member of the B team here at Bosley Niagara, right here in the St. Catharines office, looking to update you on what's going on, where we came from as far as the previous months, and likely, possibly, where we're going to go. So first up, sales numbers. That's the ultimate goal, right? Whether you're looking to buy a house and actually buy it, or put your house up for sale and actually sell it. Now, the sales numbers have been an elusive thing to get a grasp on over the last while. Really, since the Bank of Canada started to crank up the overnight rate machine back in early 2022, we've seen here in Niagara 28 months of really struggling, languishing sales. The majority of those double-digit percentage below the 10-year average. By majority, I believe 25 of 28. So yes, it's been a tough grind if you're looking to sell a home. The predictability rug was swept out from all of our feet, and it's been a bit of a battle. But here's the good news. 2024 is on pace for about 6,400 sales. Last year, the lowest annual sales of all time in Niagara for 2023, we had 6,090 sales. That's last place finisher. Right now, we're looking for 2024. It's going to come in around third or fourth last place in the last 15 years. So is third or fourth last place something to be excited about? Maybe not, but it possibly is when you look at where we were earlier this summer and certainly in 2023. So the trends are something to watch. That's the key, is what's happening month to month as opposed to this month versus last month. Have a look at this chart right here. It shows you monthly sales 2023 and 2024. Now, one thing that's of note, October 2024 had more sales than June 2024. That's only happened one other year, and that was COVID 2020, when the market was frozen in June and came alive in October. So there's an asterisk beside that because June of this year was not great. But it doesn't matter. Again, the trends have improved, and it's a sign of a change sort of in the winds, in the feeling and the sentiment in the marketplace. St. Catharines, same deal. It's hovering around 17% off of the 10-year, 17% off the 10-year. That's not great, right? However, in the summer, we were 45% off of the 10-year. So it was truly dreadful in the summertime. So 17% is definitely a change in the trend. Next up, days on market. That's a big one, right? How long is it going to take me to sell my home? If I put it up for sale today, is it going to be sold in a week, in a month, or in 6 months? Well, there's variances on that. What's your house? What's your asking price? What's the market related to your house, et cetera, et cetera. However, if you look at all the listings in Niagara right now, the average days on market for all available inventory is 121 days. That's significant. 10% of all active listings in Niagara are new construction. So if you take those out of the equation, we're still at about 105, 110 days on market for the remaining. And then if you take houses over $1 million out of the equation, so now we're only looking at listings that are under $1 million and not new builds, the average days on the market is still sitting around 90 to 92 for all available listings. So that's a much bigger number than what we're used to. Meanwhile, days on market for sales, October was up a little bit from September. It's still stubborn, but that's because of the available inventory. The market sentiment hasn't flipped that switch yet. All sales in October, average days in the market was 75. We typically like to see the market sitting in the 30 to 45 days range, but we are at 75 days in the market for the sales in October. So here's a beef that I've got. There's two kinds of days in the market. You might have just heard me say 75 and say, wait a second, I saw 42. Well, sure, you did, but there's two kinds of days in the market. There's the right one, and then there's the other one. So the right one, if you put a house up for sale, and after 3 weeks it hasn't sold, so you cancel it and you relist it, and then it's up for 12 days, then you cancel it and relist it, it's up for 32 days, cancel, relist it, and then it's up for 8 days, and it finally sells. Cumulative days in the market takes all of those listings and gives you the real number. Strict days on the market is only looking at the listing most recent to when it's sold. Take a look at this graph. This shows you the top line is CDOM. That's the real number. It shows you what stuff is really selling for because it's factoring in all those canceled listings, and lumping them all together. The lower line, the days in market, is again, when people do that cancel relist, it's only factoring in the listing at the point of which the property sold. So right now for October, CDOM was 75. Meanwhile, days on market was 42. That's a 33-day difference. That's a huge difference as far as expectations if you're a seller coming into the market or if you're a buyer looking for a home to know what the real true number is. It is CDOM. Okay, so that's sales. Days on market. Next one up is active listings, otherwise known as supply. If you've noticed more for sale signs around the Niagara region, you are correct. There are significantly more historic levels. So this year, we never cracked 3,000 active listings in a particular month in Niagara history until this year. We had 5 consecutive months over 3,000 listings. September set an all-time record with 3,300 active listings for the month. Typically this time of year, we're sitting around 2,000, 1,900, 2,100 maybe active listings. We were up into the 31, 32, 3,300 range, which is good for 55 to 60% above the 10-year average. So while October still came in around 3,100, if November follows the historic trends, we should get back into the 2,900 range. But again, historically, we would typically be in the 1,800 and change range. So we're still running around 1,000, 1,100, 1,200 listings above where the normal levels are. Take a look at this chart. It'll show you. You can see the gap just here in 2024, but it shows you the top line where we've been, and the lower line is the 10-year average. So where we would typically expect to see the number of available listings. So why is that? How is there so many active listings? Well, if you break them up and have a look at what's going on out there, again, about 10% of all available active listings are new construction. So it's about 320 of the 3,200 active listings are new builds. There's a good chunk of them that are vacant in general. So right now there's 34% of all available listings in Niagara are vacant, and about 25% of those are actually not new construction. So you have estate sales, investors with vacant rental properties, people out of transfer, that sort of thing. So that's a really interesting piece to watch. 25%, around 800 non-new construction, around 800 vacant houses in Niagara that are just sitting there empty. What happens to that vendor motivation when the snow starts to fly? Do we see prices get aligned with reality? Do the prices come down? Do they decide to rent them out to absorb some of that rental demand that's out there? Because there's a significant amount there too. I'm not entirely sure. But when you look at the days in the market for those 800 active listings that are vacant, the average days in the market right now for those is sitting at 112, which is about 2 weeks higher than the market norm. So that's a long time to be sitting on an empty house. And as we get into November and December, when the heat gets kicked on and shoveling driveways, those houses typically become harder to sell when they're colder and just don't feel so homely. So that'll be a piece of the market to watch to see what happens. Do those listings just get shelved and I'll come back in the spring? Do they get leased? Do they get the price chopped and just get them gone? We'll see. It'll be something to watch out for. Number 4, pricing. You would think that pricing would be coming down, would be really getting suppressed based on the available listings being up here and the number of sales being just month after month. This disparity, this wonkiness between the two. However, we've seen remarkable pricing resilience. Have a look at this. It's not a deep dive, right? Because pricing is so particular to a property in that moment in time. You know, Niagara on the Lake, Old Town versus Niagara on the Lake, Niagara on the Green versus Fonthill versus Thorold versus Fort Erie. But this is all lumped into the Niagara numbers. And you can see 3 prices there: average sale price, median sale price, and the HPI, which is the benchmark price. Long story. But you can see it's held itself relatively strong, and now we're seeing some upward pressure on pricing where the median is starting to edge up a notch and the average. So as that market sort of demand, that those monthly sales, if they continue to go and we see available inventory come back a little bit, that gap between supply and demand tightens. That's a thing that's going to push prices up. So that is what we expect to see modestly. But if you consider where we've been and pricing has done that to me says that pricing is sort of bottomed out. It's sitting here, and as soon as market forces skew it all towards the sellers, not a seller's market, but come out of a really strong buyer's market, then yes, we would see upward pressure on price. Number 5, what's next? Everybody wants the crystal ball, the genie, the guess, right? What's going to happen next? Everybody either wants to guess what it is or wants to know what it is. So here's mine. I think there's some factors that we have to watch for and consider. Do these sales trends continue to do what they're doing, getting closer to what's normal? We need to see that available active listing inventory get under 3,000 and then get back towards where it should be. Again, the 10-year average right now, we're 1,000 active listings above where that should be. Are we going to get back down to that quick? No, it's going to be a slow grind. But every month, if we can see some incremental improvement, that would be big. With that, days in the market should not be at 75. We love to see that get back into the 60s by the end of the year. We won't be back into the 50s or 40s anytime soon, but in the new year, we will be. Wild guess. But based on all those other pieces coming together, I do expect to see that. It all ties into market confidence. How does a buyer feel about taking that leap? How does a seller feel about selling their home to go over and buy that one or go to wherever they're going, right? It's market confidence, and what feeds that? Headlines is a big one. Bank of Canada overnight rate right now at 3.75%. All expectations is another decrease in December, and then as we get there's another meeting in January. So we will see what that does. You know, if all of a sudden we get to 3.25%, 3% overnight rate early next year, what does that do to the market confidence, to the market sentiment? Hey, maybe we can sell this house and go over there, or hey, maybe we can do that trade up or downsize. It just gets some fluidity. Right now, we're sitting around 55% of all conditional sales are conditional on the buyer selling their home. Once that fluidity returns and a bit of confidence returns, that gets down to 50, gets down to 45%, 40%, because remember, an SOP property, conditional on the buyer selling their house, does not allow a seller to go out and buy. It sort of hitches their wagon to them and holds them hostage for 30 or 45 days. As soon as we see the prevalence for the sale of property condition start to wane a little bit, then that's when we see market fluidity. People can get from A to B. There's a bit more predictability. That's the key to watch as we get into the new year. Sales for next year, well, this year is going to come in around 6,450, which is almost identical to 2022. So again, 2022 was around 6,450. 2023 was just over 6,000. This year is going to be around the same, 6,450 sales, somewhere in that ballpark. So a 10% bump in sales in 2025 gets us back to the 7,000, 7,050 sales threshold. That's still about 800 sales off of the 10-year average. So do we have room in the market for a 10% bump in sales activity? I think we do, based on all those factors we've talked about. So that would be great to see. I do see us having a little bump in price, not significant. Right now, we're sitting around 696,000 for 2024 for the average sale price, almost identical to 2023. 5% bump in that gets us up into the 730,000, 735,000 range. I do think there's certainly room for that, mostly because the upper end of the market has stalled out. As soon as that starts to fire, we'll see the median price start to come up and the average start to come up. It doesn't mean it's applicable to every house everywhere, but overall market numbers, I do expect to see that percentage start to kick in where we see some growth early next year. Historically, when you look at sale price movement, that happens anyway. So it'll be interesting to see what happens in the middle part in the back half of next year. But all indicators are we're going to go through a transitionary market next year with some regained strength. But again, that is all TBD, TBA, whatever the expression is. We will see. There are some fundamentals that are kicking in that I expect will push that through. All right, that is a wrap. Hopefully you found this helpful. If you'd like to book a call with me to talk about the market, to talk about your home, you're not sure what to do, I'd love to chat. Description of this video down below, you're going to see a link. It'll bring you to a page where you can see the schedule and availability and book a call, and we can chat about things. In the description, we'll put a link out to our blog as well. We put all kinds of information there that I think you probably will find helpful. Really interesting market conditions out there, though. It's key to get relevant, local, timely information. Headlines rarely tell the whole story. Again, my name is Patrick Burke, here with the B team at Bosley Real Estate here in Niagara. Happy to help anytime. Thank you so much for joining me. We'll talk soon. Okay, see ya. Bye.